So an income statement measures the success of a company's operations for a given period of time, and it usually does this by looking at the net income, meaning how much money did you earn in a particular period. Now there's two main categories for a single step income statement, and they are revenues and expenses. Now there's generally a lot of different types of both revenues and expenses. For example, for revenues, you can have things like sales revenue, which is the money that you get from the normal course of the business when you're selling something, or if you're providing a service, the money that you get for it would generally fall under sales. You're going to also have things like consulting revenue if you're a service-based firm. You can have things like dividend revenue. You can also have rental revenue. And these aren't the only ones, but these are the major ones. So, these are the ones you're going to see the most often. And you're also going to have things like expenses, and these are what is taken away from revenue to figure out your net income. And examples of expenses are going to be your selling expenses, administrative expenses, utilities would also be under expenses. You're going to have your salary expense, big one, tax expense. Everyone pays taxes, huh? So these are just your different kinds of expenses. Now for a single step income statement, you're going to have, like I said, two main categories, and which is revenues and expenses. And the formula for that single step income statement is just revenue minus expenses equals your net income. And all the different types of revenues are going to fall under this revenue category, and all the different types of expenses are going to fall under this expenses category. So you just take your revenue, subtract all the expenses, and then you get your net income. So let's just say, hypothetically, we have our revenue category over here, and I'm going to make up some numbers off the top of my head. Let's say that you had sales revenue of $200, and you had rental revenue of $100. That would mean your total revenue for that particular period, maybe it's a month or maybe it's a year, is $300. And your expenses were, let's just say, selling expenses and salary. Again, there'll usually be a lot more, but for the sake of simplicity, I only have two here. And your selling expenses are $50 and salary is $25 for a total of $75. So the grand total is the $300 minus the $75. So that is $225, which is your net income. Now, often on problems, you're going to see, something like this, where you'll have sales of, say, 500. You may have cash of 50. You're going to have salary expense of 25. You may have utility expense of say 50. You may have rental revenue of 100 and dividend revenue of 25 and an account payable for $20. And you're given these numbers, and what you have to do is you have to make an income statement out of them, right? So let's just go down line by line. So I'll just say this is our revenue section, and this is our expense section. So for revenue, the first thing we see is sales. So yes, sales falls under revenue because it's money you earn in the normal course of business. So we put down sales of 500. Let's see the next one. Cash. No. Cash belongs in the balance sheet. And once, if you just look at the video for the balance sheet to get a better idea of how cash works. But cash does not belong in an income statement because cash is just cash sitting in the bank. It's not money. It's not a part of your sales. So we're going to subtract cash, or we're not going to include it actually. Next line, salary expense. Salary is an expense, and how do you know? Well, it's an expense, and it also says it's an expense, and usually most problems are going to say salary expense. So we say salary 25. And then we have utility expense. Again, we know that's an expense as well. And that is 50. We also have rental revenue, which is 100. And we have dividend revenue, which is 25. So our total revenue is 625, and our total expenses are 75, which would mean that our net income, oh, and I forgot to add that we don't include account payable. That goes in the balance sheet. Just remember that. Cash and account payable go in the balance sheet. So 625 minus 75 means that our net income is $550. So this is a single step income statement, which is just revenues minus your expenses equals your net income.